All right, guys, welcome to another live stream. Welcome to another live stream. Happy Sunday. Happy Sunday. Okay, in today's live stream, we're going to talk about 5 recession-proof stocks, type of stocks. And yeah, the reason being is because a lot of people are talking about a recession's coming. And I don't think one's going to come until the end of 2025 going to 2026, and maybe not a recession but a huge market correction. And again, let me just go ahead and check my mic for to make sure that it's working before I continue, because it always tends to shut off. And I don't think one's going to come until all right, cool. So the mic is working. Going to 2026, and maybe all right, cool. Mic is working. Yeah, I don't think a recession or a significant market correction is going to come until 2026 and 2025. Remember, the official definition of a recession is 2 negative quarters of GDP, growth domestic production, and we haven't had that yet. So yeah, I believe that will come. If it does come, it'll be end of 2025 going into 2026. All right, so let's get into the 5 types of recession-proof stocks. I think this is good because if we do go into a recession, it's good to know which stocks or type of stocks that'll be good, that'll perform well during a recession. All right, one, consumer staples. So example, Procter and Gamble, Coca-Cola, Unilever, those companies sell things like household personal care products, Gillette, Oral-B, Old Spice, Head and Shoulders, things like that. So the reason why consumer staples do well, consumer staples are companies that produce essential goods like food, beverages, household items, personal care products. People still need these basics regardless of an economic condition. So demands for these products remain steady during a recession. Now, this is true. Everybody's going to need soap. Everybody's going to need food products and things like that. So your well-known brands like a Dove, like a Oral-B, and things like that are going to do well during a recession because people need to buy those things. Now, maybe people do cut back on the luxury version of those items. So maybe you end up getting a cheaper brand, but typically Procter and Gamble, Unilever, and those type of companies end up doing well because people will still be purchasing during those times. So just remember that people always need the household consumer staple items during a recession. That's not going to change. And those are some good stocks to look into. Now, I gave specific examples. That's not financial advice, but I'm just giving examples of what consumer staples are. All right, 2, utilities. Examples: Duke Energy, Dominion Energy, NextEra Energy. Utility companies provide essential services like electricity, gas, and water. These are critical services that people continue to pay for even when the economy contracts. Utilities tend to have steady cash flows, and some also offer attractive dividends, making them appealing during economic downturns. So yeah, people are always going to need water, utility, gas maybe for like up north because it's cold and that's what they use for like their stove and things like that. And people are always going to need this. Electricity is not going to go away. People are not going to stop needing electricity, and typically those stocks produce steady cash flows. So for example, AT&T and Verizon, those are communications, and obviously probably a little bit of like electricity goes to that too. But people are not going to get rid of those items when a recession comes. People are still going to keep in contact with others, and those stocks, although they don't grow that much, they do produce steady dividends and things like that. So that may be attractive to somebody that maybe has a bigger capital base and just wants to put their money in something that's not going to move as much in price during a recession, but it'll give them that steady cash flow for that time period. So those are very attractive to some people, especially with people with a big capital base. They say, okay, we're going into recession. let me get into something that maybe will move a little bit, but it's not going to be affected too much. And then on top of that, the cash flow, the dividends that I get from that will offset that minor move in price. So ultimately, I keep the same amount of money, or maybe even a little bit more, due to that cash flow that I'm getting, and not so much of a volatile stock. All right, number three, healthcare. Johnson and Johnson, Pfizer, United Health Group. Why do they do well? Healthcare is another sector that is largely immune to economic cycles. People still require medical treatments, medication services, regardless of a recession. Companies involved in pharmaceutical, healthcare equipment, and insurance typically remain in demand, making the sector resilient during downturns. And this is true. People are not going to stop getting sick during a recession. In fact, people might get sick even more during a recession because they have stress. That stress causes them to get sick quicker, and they need to go seek medical attention, medical treatment. And people are still going to be going to the hospital. People are still going to be needing prescriptions and things like that. So it's not going to be something that stops during a recession. So again, not financial advice, but those companies like Johnson and Johnson, Pfizer, United Health Group are examples of companies that will do good during a recession, or maybe not thrive, but they won't go down as much opposed to other companies, right? And I'm not sure if Johnson and Johnson and Pfizer or United Healthcare give out a really good dividend, and maybe not. I'm not sure. They probably could, but again, and they're more established pharmaceuticals, so people are actually used to pharmaceuticals being a lot more volatile. But these ones are I would say pharmaceuticals that are well established in the game won't be as volatile as like a penny stock pharmaceutical or things like that haven't got like FDA approval and things like that. All right, number four. So yeah, healthcare, definitely one to look into during a recession. Number four, discount retailers. Examples: Walmart, Dollar General, and Costco. Discount retailers often benefit during a recession as consumers look for ways to cut costs and find more affordable products. These companies tend to see increased foot traffic during economic slumps as people shift away from premium stores and products. And this is what I said earlier as well for the consumer staples. Maybe you lean towards, or you move towards less luxury and more basic. And that's what Walmart, Costco, and is. You can buy in bulk, well, at least for Costco, but Walmart, it's always low prices. So maybe you stop going to Whole Foods or your prime grocery store, and you start going to Walmart to get cheaper prices for things. And Costco, maybe you go get a membership at Costco, so now you could get bulk. You can buy in bulk, and it'll last you a lot longer, or you get more for your money. Maybe not necessarily last a lot longer, but you get more for your money, right? And people tend to look at those. I would say these would probably be, I would say the first three would probably be defensive strategies. So like consumer staples, utility, and healthcare, those would probably stay around the same. They probably won't go up crazy, but they won't go down crazy either. And then discount retailers, they said this would see a lot more foot traffic. So I think this would probably be an offensive play during a recession to say, okay, these are actually going to get more foot traffic, more people coming into the stores. So this might be a play that increases a lot during a recession. So yeah, Walmart, Dollar General, Costco, again, not financial advice, but those are examples. All right, number five, gold and precious metal stocks. Newmont Corporation is example, Barrick Gold. Why do they do well? Gold and other precious metals are traditionally viewed as safe haven assets. During times of economic uncertainty, stocks and companies that mine or trade precious metals tend to perform well as investors flock to these assets to preserve value during a recession. And these are true. This is true. Gold, precious metals, and things like that, people typically do flock to those things. Obviously, we have Bitcoin now, but Bitcoin is an emerging asset class, so it's still a very volatile asset. So I would think when it consistently stays in the trillions, it will become something that's a little more stable, and maybe people flock to that as well. But gold and precious metals, I think those are ones that are consistent during a recession. People say, okay, I'm not going to make a lot of money, but I'm not going to lose a lot of money. Let me put my money in here until I figure out where I want to allocate it at, which companies I want to get into until the storm settles per se, right? So yeah, those are the five type of stocks that do well during a recession. Again, they may not be stocks that kill it, but they're definitely going to most likely preserve the money you have. And if that's the strategy you want to do, maybe you look into those type of stocks. And then obviously, for the most part, they're defensive plays. But I would say discount retailers like Walmart, Dollar General, and Costco will probably do well because they're going to end up getting more foot traffic. So yeah, again, go over the five: consumer staples, consumer staples number one, utilities number two, three healthcare, four discount retailers, and five gold and precious metal stocks. All right, yeah, and some housekeeping items. Make sure you guys go follow me on TikTok, Financial Nutrition, Instagram, Mr. Financial Nutrition. I will be posting today. I post Monday, Wednesday, Friday, and Sunday. And that's it. I'll see you guys in the next one. Take care.